Hi Paul, really
Yes,
pleased
everyone.
to have you here today at ETHDenver for this little discussion together. Before starting, could you tell us more about you and about your project?
Yeah, pleasure. Thanks for having me. So my name is Paul-Adrien. I'm the co-founder and CEO of Spiko. Spiko is a fintech company. We are based in Paris, and we've launched the first tokenized money market funds who use public blockchain technology to maintain the register of shareholders. So essentially the people, the entities who own the tokenized money market fund shares.
Okay, and what was the idea behind to tokenize money market fund in general?
Yeah, there is something around the tokenization of securities more broadly, and then money market funds specifically. More broadly, I would say tokenization makes a lot of sense to improve the way the register of owners of securities, be it equities, bonds, money market instruments, work. And specifically in Europe, I must say, because in Europe you have a huge fragmentation of the so-called central securities depositories, which are the entities who operate the register for these instruments. And tokenizing this register brings a lot of, I would say, horizontality in the space, and also improves the way, the whole life cycle of securities, the way they can be transferred, the way they can be managed, etc., etc. So that's a huge trend, which we call the tokenization of securities, or RWA. And then turning to money market funds specifically, there was, when we started beginning of 2023, and there still is a big thing about access to the risk-free rate. So this is essentially the cost of money, right? And the money you can earn investing in risk-free assets like treasury bills. This is true in euro, this is true in dollar as well. And this is also specifically true in Europe as opposed to the US, where money market funds are way more accessible than they are in Europe. And tokenization of money market funds enables entities to earn the risk-free rate on their cash holdings, and also improve the counterparty risk profile of cash, specifically compared to stablecoins, for instance. Because when you own a fund share, and in this case a money market fund share, you have less counterparty risk than when you own a stablecoin, even a regulated one.
Okay.
So that's a big part of the story: yield plus counterparty risk.
And what is today the status of your money market fund? Do you tokenize different type of bills, T-bills today?
Yes, so we have two money market funds, one that is euro denominated and the other one that is USD denominated. The euro one essentially invests in T-bills issued by, I would say, systemic Eurozone countries like France and Germany. And the USD one invests in US Treasury bills. In terms of size, so combined, there are roughly $170 million as we speak, and 2/3 of which roughly being in the euro and 1/3 in the USD.
And okay, and in terms of growth, which market, which customer are you targeting?
Yeah, so we've launched roughly 6 months ago. So
Okay.
this is still pretty early, right?
And we've good traction just 6 months.
We've had a significant and organic as well traction on both products, growing from zero mid 2024 when we launched to $170 million as we speak. And we've seen a lot of interest, specifically among Web3 startups, Web3 foundations, which did not have an easy access to like the risk-free rate in a regulated, proper way. And when we started, by the way, it was the time when the USDC depegged back in March. So there since this moment, there's quite a lot of awareness in the space in terms of the counterparty risk, in addition to the fact that you have a cash drag, that you are not earning any yield when you hold stablecoins.
Yeah.
So these two value propositions are quite strong in the Web3 space. And we have a few competitors for sure, but we are the only one that is significant in Europe. And we also are the only one to have a regulated fund with a prospectus that can onboard any type of investors. And this makes a big difference compared to our peers who are restricted to onboarded, qualified and accredited investors under US law criteria typically. So the growth has come, indeed from startups, Web3 foundations, and also from a few individuals who use our products just as cash management platform. They move in and out using fiat or stable coins. So we accept subscriptions in fiat using the main rails like Swift, SEPA, redemptions also through these rails, and also in stablecoins using blockchain rails. So typically a subscription using USDC or USD on, Arbitrum, Etherlink, etc.
And what is the current landscape of the tokenized money market fund right now?
There is obviously a big trend around RWA, but it is still, I must say, a very small space, both compared to the size of stablecoins. So roughly speaking, there is around, I think, $200 billion in stablecoin supply.
Yeah.
And there's probably max $2 to $3 billion in tokenized money market fund supply. So that there is a big difference. And of course, in the grand scheme of things, when you compare to non-tokenized, pure TradFi money market funds, the difference is huge. There's like 7 trillion USD in money market funds in the US alone. And there's at least 1 trillion euros in European Union domiciled money market funds. So the tokenization of market funds is at the very, very, very beginning. And we are essentially the only one in Europe right now with the UCITS compliance regulated money market funds that use public blockchain to maintain the shareholder register. So in the European Union, it's roughly 200 million, what we have in our products. In the US, it's obviously a bit more. We've seen moves from BlackRock, from Franklin Templeton in the space, but it's still very, very nascent.
So there is a huge potential right now in terms of growth during the next few years.
Yeah.
And on the customer perspective, on the customer side, what is the main benefit to use Spiko instead of traditional money market fund, for example?
Yeah.
Or how they are using it?
So the first one is the UX, the product. We provide a very, very simple access to money market funds. I think the experience is probably similar to what you can find in the US, opening like a Fidelity brokerage account.
Okay.
But this doesn't really exist in Europe. So we are typically building this kind of product and UX. The second one is what you can have with the tokenized money market funds. So for instance, the ability to subscribe in stablecoins, to redeem in stablecoins, to do that in fiat as well, creates value, specifically for Web3 startups. So take an example, like a Web3 startup typically raises in USDC. They have USDC on a multi-sig, on a safe, for instance. They want access to a money market funds. They can do that directly with us. And then if they need to redeem in fiat to pay their salaries or whatever, they can. If they want to redeem in stablecoins, they can as well. So we have this flexibility that can't be found in the non-tokenized stablecoin space as we speak. And tokenization also brings new stuff, like a lot more transparency than non-tokenized money market funds. Thanks to tokenization, you provide anyone essentially with the read access to your shareholder register. So anyone can check on Dune or on any analytics platform the activity on chain, seeing like the daily inflows, outflows, seeing investor concentration in real time, and this is like fully public, fully editable by anyone. You can't have this with a non-tokenized money market funds, obviously. And the other one is I would say the right access that you provide to your onboarded entities on the shareholder register. And to be concrete, this means that you can transfer your money market fund shares. And this doesn't happen in the TradFi non-tokenized world. Imagine you have your stablecoins on your Fidelity brokerage account. Transferring this to Schwab or to Robinhood is not possible.
No.
I mean, maybe it is, but it's complex. On chain, it's super simple.
Yeah, thanks to the composability and yeah.
Exactly. You have your money market funds on a MetaMask. You want to transfer them to a ledger or whatever. You do that yourself. If you want also to transfer the money market funds to other counterparties, you can. They need to be onboarded with us because there is a sort of whitelist or allo list, which is the shareholder register of the funds. But imagine like a crypto trading firms, they want to post as collateral the tokenized money market funds to a trading venue or to another counterparty, to another OTC desk. Thanks to the tokenization, this can happen very easily on chain. And if you need to move collateral from one counterparty to another, you can do that also very, very seamlessly. In the TradFi world, that's not the case at all. If you have to post collateral on a trading venue like ICE in Amsterdam to trade whatever commodity, and then you need to move to the CME in Chicago to trade another one, these take several days, typically.
Yeah.
And it's burdensome. You can only do it with your prime broker. It's not interoperable by design. So all these things that are possible with the blockchain and that the crypto people very much understand is completely new for TradFi. So these are the sort of use cases and innovations that we are bringing to the traditional security space.
Yeah, thanks to the blockchain technology, you are bringing more powerful and more liquid money market fund.
Indeed. Sorry to interrupt, but liquidity is super interesting as well.
You started by tokenizing on Ethereum. A few days ago, you launched another money market fund on Etherlink.
Yeah.
Could you tell us more about why did you choose to launch on Etherlink and what you would like to do on this ecosystem right now?
Yeah. So to be specific, it's the same money market fund, but we are allowing our clients, any investor onboarded with us, to have the shares of this money market funds minted on Etherlink. So typically when you're on board with us, you have access to the money market funds and you can choose whatever network you want to have your shares minted on. So initially, indeed, back in mid-2024, when we launched, it was Ethereum as the main network. And since then, we've expanded to a few additional ones, and most recently on Etherlink. For us, it's really important to be cross-chain. And it's also very important to be on Etherlink because of the Tezos ecosystem that is operating on this network. Also, Tezos has many nodes, has deep roots in France. We are a France-based company. So it made a ton of sense indeed, yes, to deploy on Etherlink natively, which again means concretely that investors can have their tokenized money market fund shares natively minted on Etherlink, like it was possible on Ethereum before.
And what were the few challenges you had to bootstrap the company and this new product?
Yeah. So the first challenge was regulatory approval, to be honest, because we were the first to put forward to the regulator, to the securities regulator, a prospectus for a money market funds operating on public blockchains. It was quite a challenge. The first one in Europe. It had been done in the US by Franklin Templeton, who got a mutual fund approved by the SEC on public blockchains. But in Europe, we were the first to do it. So like any innovative project, it takes a bit more time. And specifically when you are a small startups with no product on the market except this project, it's more difficult. So that was the first challenge. And then the second challenge was, once we got the regulatory approval and were able to launch, was getting the first 10 million and then 50 million and then 100 million.
Okay.
People often say that the first 100 million is the most difficult.
Yeah.
I hope they're right, but it was indeed. And for money market funds, it's super important to have scale because you have fixed costs, you have to pay a evaluator which computes the NAV of the fund every day. You have to pay a bank, which opens bank accounts for your funds, and custody also the securities, so the T-bills that we have as part of the portfolio. All these things are like sort of fixed costs that you need to amortize on a large number of volume of assets. So that's why like bootstrapping this is often difficult. And it's also one of the reasons why regulators are pretty attentive and they take a lot of time before approving a new money market funds, because it's actually quite complex to bootstrap. You need to have sufficient liquidity, sufficient seed capital to do that. And our first investors were typically startups from the Web3 space. I can quote a few names there because they are public, but companies like OnlyDust, Kakarot, they were really keen as well. I must say they were really instrumental in us building this initial seed capital for the funds to be visible, for the funds to grow, and for the funds to amortize the fixed cost that we had to. I think now past 100 million, things are a bit simpler. You get more competitive on fees, etc., and you also are more. You have more visibility because people know that there are like a significant amount of assets and in these products.
I have in mind an interesting thing. It's for Web3 projects. Sometimes it's quite difficult to have any bank account, and it's still the case sometimes in France or many in Europe. Thanks to your service, this guy can have access to a risk-free product. And so, how they are working with you, or how you are managing to onboard them?
Yes, it is true. It was also difficult for us to get the support of a depository bank, by the way.
Uh-huh.
And very grateful to the people at Cassis, which is a huge depository bank in Europe, a subsidiary of Crédit Agricole Group, because they supported us from the very beginning. There are a very limited number of depository banks. This has like huge companies, and getting one is instrumental when you want to launch a money market fund. And it's also true, by the way, that indeed onboarding, finding a bank for a Web3 companies can be difficult. I think things are changing, but it takes a bit of time. And our product is indeed a very good cash management product for any Web3 companies. You onboard with us, you have to do a KYC, KYB, of course, but we make that relatively simple and straightforward. And then you have access to a sort of a narrow bank, which a money market fund is essentially. You can put your cash, it's fully reserved, backed by T-bills. You can redeem anytime in fiat, in stables. So that's a great product. You can't do payments yet. So it's a pure cash investment, I would say, product. But at some point, we might get into payments. And then we could have like full suite, I would say, of banking services.
Yes, that was my next question. Apart of growing the TVL and onboarding new liquidity on your money market fund, what will be the next step for you in terms of product, in terms of new services that we would like to build?
Yeah. So I like to present it as like 3 stages. The first one is, and the 3 stages are 3 different use cases that you can develop around the tokenized money market funds. The first one is pure like borrowing cash management. You need access to the risk-free rate through a safe product. And that's obviously the first use case and the one we've been developing and so far. The second one is collateral. Once you have your money market fund shares, you can use them through in DeFi with counterparties, centralized counterparties, to get access to loans. And there is a very interesting, nice complement between tokenized money market funds and, for instance, lending and borrowing markets in DeFi. And I will take an example to illustrate that. If you have your money market fund shares and you need cash, access to cash on a Saturday, if you ask for redemptions, the redemption will only be executed on Monday, the next business day. But maybe you need cash over the weekend, right? And if so, you can use put the money market fund share as collateral in a lending borrowing protocol.
Invest.
And borrow USDC or any stablecoin, for instance, essentially cash, immediately, atomically on chain. So collateral is the second use case we want to focus on in the coming months. And the first one comes back to what we discussed previously around payments. The nice thing with the tokenized money market funds is that it's transferable 24/7 and settled 24/7 between shareholders, thanks to the blockchain network below. And this means that it could be used for payments, right? You could have like 2 onboarded counterparties using a tokenized money market fund, which is essentially a regulated cash equivalent, to settle transactions. And this is where money market fund, which is a form of money, gets a bit more moneyness, I would say. So that's the first, kind of use case. The third kind of use case that we want to focus on. It will probably take a bit more time because you need to build this network effect. You need to have a lot of entities that are onboarded with us. Right now, it's around 1,000, both companies and individuals, but we aim for a lot more. And once we have this network effect, it will make sense, for these counterparties and these onboarded clients to exchange the money market funds and to use it for payments.
And so with the third use case, you don't need any more bank.
No, indeed. That's the vision. The money market fund is sort of a narrow bank, fully reserved bank. It's earning yield, the risk-free rates. There is no like net interest margin that got eaten by the bank. Of course, you pay a bit. There is a fee, a management fee, but it's very small, so the take rate is really, really minimal. Specifically at scale, once you reach like significant size, typically like at scale, the money market funds cost you between 10 to 25, 30 bips. So if risk-free rates are around 4%, like they are in USD right now, or 3% in euro, you get almost 100% of the risk-free rates.
Yeah, so the user will capture almost 100% of the real value of the asset.
Yes, and the more things he can do with it, collateral for borrowing, transfer for payments, the better the value of the money market funds, and then the less the bank indeed becomes relevant.
And you related to DeFi protocol, you mentioned that the money market fund from Spiko will be potentially used as a collateral in DeFi. How do you manage that? So people will be able to, as they are whitelisted on your platform.
Yeah.
So people that are whitelisted on the platform will be able to use as a collateral, let's say on Morpho, Aave, or this type of protocol to borrow the asset. It's already available or not?
With us, it's not. And overall in the industry, it is still very, very, I mean, there are a few experiments, but it's still not something that, works at scale. But I expect a few announcements in the coming weeks or months on that end from us. And there are no like strong obstacles to that becoming like a reality. The main question is the demand, right? Who will be the borrowers? Who will be the lenders? Rates in DeFi are pretty high. So the lenders, so the people in this example lending USDC to the market for borrowers to be able to borrow in USDC would need to be like compensated at relatively high rates. So there's a bit of a question in terms of how this is incentivized, et cetera, et cetera. But over time, I expect these use cases to work at scale. And there will be a convergence probably between DeFi and TradFi rates, at least the risk-free ones. And people being able to, through DeFi protocols like Morpho, for example, to borrow very seamlessly a cash equivalent or any money token like USDC.
And as you are directly part of the RWA ecosystem, how do you see RWA? It's a huge trend right now in 2020, 2025. How do you see this market? You think like other type of assets will be tokenized on-chain, like other traditional asset or commodity? What is your point of view on that?
My view and our view at Spiko is that we need to go from the most basic, simple things to the most complex ones. So probably from the most liquid one to the most illiquid ones eventually. That's why we started with money market funds. And there's probably a story that will happen, in stages. It started with the tokenization of e-money, stablecoin. Then we got into the tokenization of money market funds. And as I said, it's still a very small industry. We are at the very beginning of this journey. And then will probably come the tokenization of like bonds, most likely through funds initially, which are easier to tokenize than bonds, at least at scale, in my view. And then we'll come down to equities and probably illiquid assets like alternative assets eventually.
Okay, really interesting. Yeah, because there are more and more projects who are trying to tokenize different type of assets and bring on-chain or thanks to the blockchain technologies, they are trying to expand the potential of this asset. And sometimes there are some traditional assets that go on chain, and it's more easy for any not institutional person to be able to add access to this type of asset. And like, I don't think today an individual can have easy access to a money market fund in general.
Yeah, and maybe that's true, specifically in continental Europe. This product exists, you can find them like if you have a brokerage account and all, but it's not mainstream at all. So indeed, tokenization will help, in my view, because of the UX we are able to provide, also because of the additional transparency that we bring to these products. And eventually, I think all securities got tokenized because the blockchain as a settlement rail is just a better stack, a better database to do that than what exists today in the traditional system. So that's the main reason I'm bullish on this trend, right? Just as a pure settlement layer, blockchain technology is better, strictly better. It works 24/7, it's global. As long as the infrastructure is robust and works at scale, to me, it's a no-brainer.
And so, thanks. And after ETHDenver, what will be your next step and what we can hope for you during the next year or during this year, sorry?
Yeah, so deployment on Etherlink is a big thing. We want to grow the TVL there, meaning partnering with the key companies in the ecosystem, key individuals for the treasury management, then developing collateral, maybe permissionless wrappers, stablecoins on top of the money market funds. That's an interesting trend, by the way, that I didn't mention. There is in the stablecoin industry a strong need for transparency. And the best way to bring transparency is to use tokenized assets as your underlying assets, as your reserve assets. Take a Circle, for instance. The reserve of Circle is mostly like a BlackRock managed non-tokenized money market funds. Having these reserves tokenized is strictly better.
Yeah, it brings transparency.
Transparency from an asset, from a risk perspective, it's exactly the same. You invest eventually in the same type of assets, T-bills, overnight reverse repos, and all. And from a transparency auditability perspective, it's strictly better because you can check the reserve 24/7 independently. You don't need to wait for a periodic report from an auditor to be sort of certain that they have the cash.
Okay, thanks. Thanks, Paul-Adrien. Thanks for being here.
Thank you very much.
And I hope you the best for the next months and Spiko to reach the 1 billion TVL as soon as possible.
Hopefully by the end of the year.